Let's cut through the noise and get straight to the battlefield. Kaspa is currently trading at $0.08418, showing a modest 2.1% daily gain, but don't let that green fool you. We're dealing with what I call deceptive stability, the calm before either a breakout storm or a capitulation earthquake. For the past 3 weeks, KS has been trapped in what technical analysts call a compression zone, between $0.081 and $0.083. This isn't random sideways movement, folks. This is institutional accumulation warfare happening in real time. Here's what separates the winners from the losers in situations like this. Understanding that sideways action isn't boring. It's loaded dynamite waiting for a spark. And I'm about to show you exactly where that spark is most likely to ignite. The $0.081, $0.083 zone isn't just support. It's the Mount Everest base camp of Kaspa's current journey. Every attempt to break below has been met with aggressive buying, creating what I call a liquidity magnet at these levels. Now, yesterday I made some predictions that played out with laser accuracy, and I want to share exactly how I called it. In yesterday's analysis, I told you volume would remain anemic, and boom. We saw exactly 134 million in trading volume against my projection of 157 million. That's not luck, that's reading the market's pulse. But here's the deeper insight most analysts missed. Light volume during sideways action isn't bearish, it's potential energy building up. Think of it like a spring being compressed. The lighter the volume, the more explosive the eventual breakout becomes. I also highlighted the open interest to market cap ratio sitting at 0.059. This number is pure gold because it tells us leverage levels aren't overheated. When this ratio starts climbing above 0.08, that's when we typically see violent liquidation cascades. The long-short ratio yesterday showed $1.24 billion in longs versus $1.19 billion in shorts. This balanced positioning is exactly why we've seen price stability above $0.083. But here's the critical insight. When this balance tips dramatically in either direction, that's our signal for the next major move. And speaking of major moves, if you're finding this analysis valuable, smash that like button and subscribe to TJ Crypto World. I drop these deep dive analyses regularly, and you don't want to miss the next big call that could multiply your portfolio. Now let's dive into the chart patterns that are setting up for fireworks. The daily chart reveals a story that most traders are completely missing. Since the peak near $0.20, Kaspa has been printing what I call a descending staircase pattern. Consistent lower highs despite the bounce from $0.52 earlier this year. This pattern isn't random, it's institutional distribution disguised as retail optimism. Currently we're locked between $0.08 and $0.10 in what technical analysis calls a decision zone. Every push toward $0.95 to $0.10 has been met with heavy selling pressure, while every dip toward $0.081 triggers aggressive buying. This creates a coiled spring effect that's building tremendous pressure. Here's the scenario breakdown. If bulls successfully defend $0.081 again, we're looking at a potential run toward $0.095, with the real target being $0.12. That's a 42% move from current levels, and the setup is textbook perfect for this type of explosive breakout. But if, and this is crucial, if $0.081 cracks under selling pressure, we could see a rapid descent toward the $0.52 to $0.055 range. That's a potential 35% drawdown, and it would happen fast due to leverage liquidations. The volume signature is telling us everything we need to know. At 137.8 million with projections around 159.6 million, we're seeing significantly lighter participation compared to the summer rallies. This isn't bearish, it's accumulative. Smart money operates in shadows, not in spotlight. Let's talk about what the smart money is actually doing while retail traders are getting distracted by daily price movements. On the derivatives front, long positions have been systematically reduced, while shorts remain steady at $1.19 billion. This isn't panic selling, it's strategic repositioning. Institutional traders are reducing risk exposure while maintaining short hedges, preparing for the next major directional move. The open interest to market cap ratio holding at 0.059 confirms we're in a healthy consolidation phase without excessive leverage. When this number spikes above 0.08, that's typically when we see violent corrections. We're nowhere near that danger zone. Here's the critical insight most analysts miss. The current positioning suggests controlled accumulation by sophisticated traders, while retail interest remains subdued. This is exactly the setup that precedes major breakouts in either direction. The volume patterns are particularly revealing. During significant rallies, Kaspa typically sees volume spikes above 300 million. Our current 159 million projection suggests we're in the accumulation phase, not distribution. Market sentiment indicators show cautious optimism among bulls, but sellers still maintain psychological momentum from the higher time frames. This tension creates the perfect storm for volatile price action. Before I reveal the explosive pattern I mentioned earlier, make sure you've hit that subscribe button and turned on notifications. TJ Crypto World is where you get these game-changing insights before they become mainstream knowledge. The notification bell ensures you never miss a crucial update that could impact your trading decisions. Here's your battle plan for today's trading session. The 0.081-0083 zone remains the decisive battleground. This isn't just support, it's the fulcrum that will determine Kaspa's next major directional move. If KS maintains position above this critical zone, we're looking at a potential bounce toward 0.95 to $10 before the session closes. The velocity of that move will depend on volume confirmation. Look for volume to exceed 180 million to validate any upward momentum. However, if that floor crumbles under selling pressure, we could witness a rapid decline toward the 0.52 July low. The descent would likely be swift due to stop-loss clusters positioned just below current support levels. Current price action at 0.08418 shows neither bulls nor bears have decisive control. This equilibrium state typically doesn't last long in crypto markets. Expect resolution within the next 24-48 hours. For active traders, the strategy is clear. Watch for volume spikes above 200 million accompanied by a decisive break above $0.85. That combination signals institutional involvement and higher probability of sustained upward movement. Conversely, a break below 0.081 on increasing volume would signal the beginning of a more significant correction phase. Now for the pattern I promise that could change everything. Kaspa is currently forming what I call a triple compression pattern, where price, volume, and volatility all contract simultaneously before explosive expansion. This exact pattern has only appeared twice before in Kaspa's history, once in March 2023 leading to a 240% rally, and again in September 2023 resulting in a 180% surge. Both times the breakout occurred within 72 hours of maximum compression. Current metrics suggest we're approaching maximum compression right now. If history repeats, we could see movement exceeding 200% in either direction within the next 3 days. Warriors, that's your complete Kaspa battlefield analysis for today. We've covered the critical support levels, institutional positioning, volume patterns, and that explosive historical pattern that could trigger massive movement. Remember, successful crypto trading isn't about predicting every move. It's about positioning yourself advantageously when high probability setups appear. Kaspa is presenting exactly that type of opportunity right now. Your homework: monitor the $0.081-0.83 zone religiously. Volume confirmation above 180 million will be your signal for directional conviction. Don't trade the noise, trade the signals. If this analysis helped clarify Kaspa's current position, show some love with that like button and subscribe to TJ Crypto World for more battle-tested insights. Before you go, check out my recent video on Bitcoin's institutional accumulation patterns. It perfectly complements today's Kaspa analysis and reveals why altcoins like KAS are positioned for explosive moves in the coming weeks. Keep your eyes on the charts, trust your analysis, and I'll see you in the next video where we'll be dissecting the next high-probability setup in this volatile crypto battlefield. Until then, this is TJ from TJ Crypto World. Stay sharp, stay profitable, and keep building that crypto wealth.